As you know, National Cabinet will meet on Friday with the last meeting before Christmas. As Andrew Clennell reported this afternoon, the federal government is seeking to introduce domestic price caps on both coal and gas. Coal to be capped at $125 a tonne and gas capped at $13 a gigajoule. Coal caps, gas reservations, long-term contracts versus spot price markets. What's it all mean for you, and will it help cut your power bill? Who better to help explain all of this, the ins and outs, is a former resource minister. You know him well, Senator Matt Canavan. Matt, thank you for your time. I want to get into some of the detail, help people at home understand this, because it'll be sold come Friday as a big push to cut their power bill. But I think the wool over their eyes is sort of the argument here. Let's start with what we've picked up this afternoon via Andrew Clennell. This coal cap said to be forced on the states by Canberra. No compensation yet on the table. Can the states refuse to do it? Does it require legislation? And is there a risk for the federal taxpayer here that they'll be forced to pay the states billions in compensation anyway?
Well, all of the above, Peter. I find it quite remarkable. We're sitting here in Australia and contemplating a federal government in cahoots with the states, apparently trying to set prices all over the economy. I mean, this is literally what communist states do. They set prices and think that's better than the market. It always ends in tears, as we've seen all around the world. If only other countries had tried this before and we could see what happened. Well, we just have to travel to South America or the former Soviet Union to see how terrible these ideas can be. And so in terms of what it means for Australian families, it's not even clear this will help. Yes, legislation's needed. Yes, the federal government can't do these sort of things on its own. But even if a cap is put in place on, say, coal, very little of the coal used in our coal-fired power stations is bought on what's called the spot market, is bought on the day-to-day market, which has seen these very high increases in coal prices. Most coal used in our power stations has been contracted for very long periods of time. When they build a coal-fired power station, they usually sign a decades-long contract, so they guarantee coal at a certain price. So these price caps won't even affect those input costs that go in to your electricity bill. So unless you're looking to buy coal yourself and throw it in the stove at your home, and maybe you get a benefit from these caps coming in, it's not going to help you much. It's just, as you say, it's just a distraction here from the government's failed promise to cut power bills by $275.
Let me just jump in there. So if my power comes from a power station where they're using coal on a decade-old contract, and let's assume the prices were a lot lower, they would have had incremental increases, but the prices would have been a hell of a lot lower than they are now because of the Ukraine war, then doesn't that blow apart the government's argument that the prices are high, your power bills are high because of the Ukraine war, if it's using coal at a price set a decade ago, long before there was a Ukraine war?
Absolutely right. Most coal, almost all coal, well over 80% of our coal comes in that sort of fashion, comes from old contracts that are set at a price years ago. The reason prices are high or have elevated in the last year is because of the unreliability of the renewable energy system we're now building. And what that means is that when renewables are on, when wind and solar is on, those coal-fired power stations don't run, or they can't get a good price for their output. When wind and solar isn't there, the coal-fired power stations have to make all their money up in those shortened periods to pay back their capital and their costs. That's why the average price, the average cost of power is going up, because you get the renewables don't actually replace the need for the coal or gas power stations. You just have to finance those coal and gas power stations over a shorter period of time. Now, of course, the government, because they're obsessed with renewables, will not admit this fundamental point. That we've been changing our energy system from one that's dependent, one that's reliable, one that gets average costs down, to one now that is completely unreliable and has to have massive amounts of backup, which increases the price for all Australians.
If there's been a $3 billion improvement this year to the Queensland budget because their royalty take has been higher, because coal prices have been higher, why would they agree to what Anthony Albanese wants to do?
Well, Queensland's driving a hard bargain here, and we're going to get the normal sort of state and federal politics here, where a Queensland Premier gets good coverage up here in Queensland by bashing Canberra. That's what will happen. but it won't solve many issues for us. The Queensland government is ripping out massive amounts of royalties from central Queensland where I am, not reinvesting it back in here. And you have to ask the question, how come the Queensland government will get compensated for that, or potentially get compensated for that? What about the investors in the private market? I know many Australian families who have invested in shares in coal companies and are finally getting a return on those. Apparently they don't get compensation, but the Queensland government does. This is a topsy-turvy world here where governments here are running the system to benefit themselves and the political results they get. We're not letting the market and our free economy, a free country, operate to deliver good outcomes for the Australian people. The government, a couple of years ago, coal prices crashed, absolutely crashed. And a lot of companies, a lot of people went to the wall. The government weren't there, obviously, to help them out, nor should they. That's the risk of investing in a volatile market in the mining industry. But now that times are good, the government's there to try and cap those benefits. That's not a level playing field, and it's not going to attract investment in our resources sector. And one final point here, our resources investment right now is at record lows. Despite having the highest prices, we've got higher prices, higher terms of trade than we had in the last mining boom. But resources investment has not ticked up. Indeed, it's slumped by 5% this past week. That's a damning indictment on this government, who is showing no consistency when it comes to economic policies, and therefore other people are not investing in our economy for the future.
So just quickly, I've got to go, but you don't hold out much hope that even if we get an agreement on Friday, and people say that's now less likely with these caps being on the table, it's not going to help us with our power prices. No,
the only way to get power prices down is to increase the supply. That's what we need to do, Peter. We need to build reliable power stations again, coal, gas, nuclear too. We should be considering that, as the South Australia Premier has put on the table. The Labor Premier has put on the table this week. We should be considering that. And we desperately need to make sure we do not blow up the Liddell coal-fired power station. It's due to shut in April next year. It was a big reason prices went up this year when a quarter of it closed. The other 3/4 is shutting in April. That should be mothballed. We should keep that available in case the worst happens, because the other thing that price caps will do is, instead of price rationing supply, queues will ration supply. And in the electricity market, that means we could have blackouts. We've got to try and avoid that situation for our country.
Absolutely, Matt. And of course, we know they put an application in to quite literally blow it up and not keep it intact, to blow it up. That would be absolutely crazy. Matt Canavan, thank you.